If you have bad credit, can you still get a mortgage? Now, what would you mean by bad credit? So, today we're going to talk about the different types of bad credit and tips on getting a mortgage with bad credit. Now, my name's Manda. I am the mortgage coach. I combine mortgage advice with financial coaching. So let's jump in. The first thing I wanted to do is explain what is meant by bad credit. Now, bad credit is the credit profile. So what that could mean is if you've got missed payments, if you've got late payments, if you're in arrears, if you've got a high debt to income ratio, if you've got a high credit utilization, and other financial issues like certain types of debt, and also whether you've got a financial associate that does have bad credit. Now, if you're enjoying this video, please like, subscribe and share if you know someone that could take some advice from this. Now, let's talk about the different types. Now, the first one I mentioned is missed payments. Now, missed payments is when you miss it completely. Now, what tends to happen is if you miss a payment and it goes past the date that it was due, say, for example, a credit card, and then you pay it later on, if it's very close to the next payment date, they'll allocate it to the new one and put the other one down as missed. So one way to get around this is if you are going to make a payment, ring them and let them know which one it's related to, because it's better to have 2 late payments than 1 missed and 1 early. Hope that makes sense. The next is in arrears. So arrears is when your payments are, you've missed a certain amount of payments and they're actually now very, very late. So you can have 1 month in arrears or 2 months in arrears. Now, the next one is when you actually make the payment. But you make the payment, but you don't make the minimum payment. So this is something you need to be aware of. Like, for example, with a credit card, you have to make that minimum payment. You can make more than the minimum payment, but you have to make the minimum payment because then that is also classed as a missed payment. The next thing I wanted to talk about is credit utilization. Now, when you're applying for a mortgage, they like your credit utilization to be about 30%. So you need to reduce the amount of money that you owe on your credit card. The other thing that is a slight trick is as long as your debt to income ratio is okay, and I'll talk to you about that later, instead of paying off your credit card, you can request for your credit balance to increase. So for example, if you had a credit balance of 500 and you had a credit limit of 700, that's quite a high credit utilization percentage. But if you ask for that credit card to be increased from 700 to say 1,500, then you have less of credit utilization. It's more closer to 30% than over 50%. So that's a way around it. The only way I would not do that is if, for example, you then were looking at the debt to income ratio. So say, for example, your income was £20,000. Your credit limits, your access to credits, your loans, everything added together needs to be less than 10,000. It needs to be less than 50% because that's what they prefer. Now, nowadays, it's so easy to get credit car finance and things like that. Sometimes, and I've come across a few where when you look at your car finance and that's the total balance on the card, then you've got store cards, you've got credit cards, you've got loans, you've got overdrafts, all of them added together. Sometimes they end up being even more than you earn per year, which throws out the debt to income ratio completely. So that's also something that you need to look at. So the next thing is when you're looking at your debt, also look at other people's debt. And the good thing about that is it is quite easy if you're linked to someone who has bad credit and you can prove you're no longer linked to them anymore, then you can actually get them off your credit report and it can improve your credit quite quickly. The other thing is check your addresses because sometimes there's debt linked to those addresses. Now, basically, when you are looking at bad credit or poor credit, and you're trying to apply for a mortgage, lenders will look at certain things. So the first thing they will look at, or one of the things they'll look at, as I've mentioned before, is missed payments. They'll look at how much in arrears you are. They'll look at how many credit cards you've got. They will look at how many loans you've got. They will look at your current accounts, and if it does have an overdraft, you utilising the overdraft. The other thing they look at that they really don't like is car finance, and car finance for a lot, because normally car finance will probably lend you, as I've mentioned before, more than your actual salary, which is a definite no-no when you're applying for a mortgage. I once had a client who, because she had good credit, was getting out credit for everyone. So she had a decent credit score because she was using a lot of credit. But when they actually looked at the debt to income ratio, she had 3 car finances. One was for her, one was for her other half, I think one was for her mum, and all of them added together was more than her actual income. So yes, she may have had a great credit score because she was using so much credit and she was making the payments every single month, but she was just had so much debt that we couldn't get her a mortgage. Now, the next thing to look at is your financial associates. Now, when you look at them, you need to make sure that they have decent credit too. The next thing I would say is, if you've ever, and I know if you're short at the end of the month, sometimes it's just something that you've done on the one-off, but same day loans. Now, payday loans. Now, with payday loans, banks don't like this at all. So lenders will look at, there are certain things that lenders really don't like. So payday loans, car finance, and also if you're up for remortgage, I would say mortgages in arrears. That is probably the worst thing. If you've got mortgage in arrears, a lot of lenders will not lend to you. So they want you to be out of arrears for, say, about 2 years, and then they will consider lending to you after that. Now, if you have bad credit, it's good for you to sort of double check how bad it is. Now, credit score doesn't help, as I said, because you can have high amount of debt, which increases your credit score because you've got a lot of credit and they like you having credit, you're making monthly payments and all that kind of stuff, but it can affect your credit profile. Now, when you are considered to have a high amount of credit or bad credit, for those reasons, and another reason would be to have a CCJ, which is a county court judgment. Now, when you have all of that, you can go to a mortgage advisor and they may be able to find you an adverse lender. Now, an adverse lender will probably ask for a larger deposit, so they don't do mortgages for like 5%, as in 95 loan to value and a 5% deposit. It's normally like 20-25% deposit, even if it's residential. The other thing is they will charge you really high product fees. I'm talking £7,000-8,000, possibly more. They will also charge you a higher interest rate. So say, for example, the interest normally on average for a residential of that significant deposit is about 4%. They will be charging you 6%. So it can really, really make a difference. But there are specialist lenders out there that will do adverse mortgages, but you need to be aware of product fees, interest rates, and all of that kind of stuff. But what you can do is, yes, you can go to a specialist lender. Yes, you can accept the higher interest rate. Yes, you can work on a larger deposit. You can also consider credit repair. Now, I've done another video on credit repair, so please refer to that. The other thing is working out your affordability, and that it all goes back to your debt to income ratio. So if you can reduce your debt and also improve how much you earn, that can make a big difference as well. Now, I am offering a credit clarity. So I will put a link in and you can book an appointment where I will review your credit report. I'll explain how the credit report works. I'll talk to you about yours. It will be tailor-made advice for you. If this is something you're interested in, check the description and you'll see the link to book an appointment. So if you've enjoyed this video, please subscribe to my channel, share it with others who you think would get some use out of it, and like it so it can go to more people. Take care. Bye bye.